Paul Nolte is the Senior Vice President, Portfolio Manager at Kingsview Asset Management, standing by. Paul, thanks for taking the time to be with us after such a big week. You must be exhausted. I want to begin with the U.S. consumer retail sales data and how last month we saw a huge spike. We were shopping like it was going out of style. Last month we were up 0.7%, less autos up 1%. This month, in terms of the numbers that we're seeing here right now, what is it telling you?
It's telling me that the consumer is still in pretty good shape. I mean, we listen to all the consumer sentiment numbers, and we listen to a lot of the touchy-feely numbers, if you will, and they've been generally pretty positive. Retail sales is really the hard data. What are consumers doing? We saw a big pop from Amazon Prime last month, or the month prior. We thought it might come off a little bit, but still pretty strong. So that indicates to us, at least, the consumer is healthy. I think that speaks to the good wage growth that we've seen and prices remaining relatively steady for a lot of goods and services that are being bought. So again, taking that forward a little bit, we're seeing a little bit of a decline in bond prices, a continued tick up in yields, which you highlighted in the last segment. That I think is going to continue, and I think it's going to filter through to the Fed, not at the meeting next week, but I think later on in the year, you may see them sit on their hands a little bit more as some of the data is coming in favorable for the U.S. economy.
Yeah, it sure is, Paul. I actually just noticed that they revised last month's up from 0.7 up to 0.8. We've got 0.4 on a month-to-month here. I'm wondering what the Fed's interpretation is going to be on this. I mean, I wouldn't think that this is the kind of number that's going to slow them down in terms of rate cuts or stimulus at this point.
Not this particular number, but if you take it in context with everything else that we saw, a little bit higher CPI number, core CPI, a little bit higher PPI number, wages still pretty good, and employment growth still pretty good. So when you take a look at those big data points, it all points to a little bit better economic backdrop. You look at the Citigroup economic surprise index. That's now in positive territory after hanging below zero for much of the year. So again, the numbers are coming in a little bit better than expected, but I don't think that changes next week's meeting. But I think it does change and potentially change the Fed meetings in the next couple as we get to the end of the year. They very well may take a pass at one of the last two meetings.
Noted. We'll get a little bit more insight in terms of this a little bit later on this morning with business inventories today at 10 a.m. Eastern. Paul, I wanted to get your thoughts on, with all the optimism surrounding trade, we've had rates coming off the August lows, the ES near all-time highs. Are you surprised to see gold holding up so well? It's continued to hold above the $1,500 level.
Yeah, it was kind of a surprise to us. I mean, it sold off very hard late last week, early part of this week, as part of that momentum trade, if you will. So we saw that reversal in the equity markets, value growth. We saw it in the currency markets. We saw it in the gold market. We saw it in the treasury market. We're getting back to kind of a more normal relationship. Gold is doing well. The dollar's doing relatively poorly. We're seeing a pickup in interest rates. The interest rate versus gold picture doesn't quite jive, but gold has been acting as the anti-dollar for quite some time. Yeah. And the dollar coming off here, I think, bolsters gold in the short run.
All right, we'll continue to watch that relationship. Paul, China increased their physical gold purchases recently. I'm wondering if we should be concerned with gold being the safe haven asset, the place where investors seek safety ahead of or during times of volatility and uncertainty. Are they telegraphing something? Should this be considered as our ability to peek through the keyhole, so to say, and see them expressing some concerns here?
It's possible, but the best way to take a look at what the safe havens are is take a look at the drawdowns. When do you see equity markets have trouble? Throughout the month of August, the equity markets were all over the place. And what were the safe haven trades? To a certain extent, gold was, but certainly too the Treasury and the U.S. dollar. And those are really the top two. Gold is probably number 3. And it depends, too, on whether, gold is number 3 or down the list. But it is still Treasury and dollar when the equity markets really struggle.
Paul, let's talk about a couple of the other metals, the industrial metals, which, for example, silver has been pointed north for a while now, rallying with gold and signaling to potentially that some of the growth, the demand concerns that we've been hearing about, and even U.S.-China trade talks, we might be a little bit better off than we see things being right now, at least in terms of where the futures are pointed. We've seen gold recently up to 19. How about copper evenly rallying recently? I mean, this is a sign of optimism in terms of times to come, in terms of growth demand, in terms of economic conditions globally.
To a certain extent. I mean, copper has been really beaten up badly over the course of the last year and a half. You can also look at iron ore kind of the same way. But both of them have popped here a little bit. We're putting it in the camp of maybe a dead cat bounce until we see some more evidence that this is going to stick around for a little while. Given the persistent upper left to lower right pattern of the chart, we're going to see these bounces here.
Noted.
But you're right. Put it in the mosaic of silver, iron, copper, what we're seeing in the Treasury market, what we're seeing in some of the economic data points. It points to a U.S. economy that is still growing, albeit at 1.5%, 2%, but certainly a lot better than many expect.
Yeah, I've been saying hopefully we're not setting up for a situation that we've seen before, basically the fool me once, shame on me. Shame on you, I should say. Fool me twice, so you know how the saying goes. But definitely, we also have palladium, which has been inching higher as well. Let's talk a little bit about ticker symbol PA, up to 1650 recently. Paul, how closely have you been watching this?
Palladium's not one of the big ones that we keep an eye on. We keep an eye on the much bigger metal complexes. So palladium's one that we've generally passed on. But again, it fits with what we're seeing in a lot of the other economic numbers. Certainly palladium, a little bit more of an industrial use. So there is some demand for that as things pick up. We'll see it a lot in the auto sector. So again, generally pointing to a healthier environment than I think many are expecting. Part of the reason why we think the Fed might sit on their hands toward the end of the year.
Yeah, Paul, we've got a chart up here. We're showing palladium rocking out to the upside. Copper's been lagging some, but they're all silver, gold, and platinum coming off those lower levels. Paul, great discussion on the metals. Not often we get to talk commodities with you. Well, aside from the energies, really appreciate you joining us here this morning and helping us take a look and sort through some of the activity we've been seeing in the precious metals. That's Paul Nolte, Traders. He's the Senior Vice President and Portfolio Manager at Kingsview Asset Management.